Hey everybody, this is Jim at SP500chart.com. It's about 5:15 on 6/16. I didn't do that on purpose. It's just the way it worked out. 2014. And we're going to take a look at the chart of the S&P 500. After I remind you that the website and this video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. You know, I've talked in the past about how charts tend to be works in progress, and this one that we're looking at here over the past 6 days has been something of a work in progress. We broke this this ascending support line. We then started to trade down, actually off of this top here at about 1956. We accelerated down. Kind of looking, whenever you do that, that's kind of looks like maybe a bottom getting put in. You remember you have blow-off tops where the buying increases beyond reason and you get a huge move up over your channel. And obviously this was not a big move, but relative to what we see on the chart, we were selling down at a moderate pace, and then on the 12th, last Thursday, we sold down more aggressively. And a lot of times, when you get that more aggressive selling, that is people kind of just throwing the towel in. I mentioned over the weekend, well, first off, I mentioned on Thursday that once we get over this line right here, that I thought that would likely be setting up the bottom for us to reverse and come back up and re-challenge 1956 again. Then I mentioned as well that as a second line, that if we get over this line, then I think that's even more evidence that we're reversing and we're going to come up to challenge this high that was put in place on last Tuesday. Yes, Tuesday. Wait a minute. Monday. Excuse me, today is Monday. Now, here's where the chart becomes a little bit of a work in progress. I am going to scrap this line, and I'm going to draw one somewhat similar, but a little different. Here we go. I think this line is now, with what we've seen today, we could be just making a little inverted head and shoulders consolidation here. And we'll know if we get over this line, then that would confirm this potential. And if we do get over that line, it should be pretty soon, and we would be able to measure about how much our minimum target would be. And as luck would have it, if this happens any time early tomorrow, our minimum target becomes our 1956, which would lend credence to the idea that we would re-challenge that high at 1956. But for now, I'm going to kill this little target line. You might say, why are you killing the target line? Well, the reason is because this is not a confirmed pattern. This is just a pretty little potential pattern. But right now, it sort of looks that way to me. So let's just kind of keep our fingers crossed, keep an eye on it tomorrow and Wednesday, and see if we get over this line right here. And we also could have started up here and drawn a line over 1, 2, 3, 4 over 4 touches on this line, but the fact of the matter is it's really the same thing. Slightly different, but off by such a small margin. I would rather look at this as an inverted head and shoulders consolidation. In other words, we come up to a high, then we start to sell back, and we make a little inverted head and shoulders that serves to consolidate the market, to absorb some of the buying pressure, some of the selling pressure. And once we get over this line right here, then the buying pressure should once again drive the S&P. So guys, it's just that simple for our Monday afternoon, June 16th video. Keep an eye on this line. If we get over it, I think the handwriting is on the wall that we're coming back to re-challenge 1956. And I remind you, we still have a target of 1990. So until we really break down and start to take out some important support, I'm saying that 1990 is certainly worth keeping an eye on as a short-term minimum target for the S&P 500. So let's let that serve for today's video. Pretty simple situation. Appreciate you taking time into your day to watch this, and I really appreciate your very, very kind support. If you are not a member of SP500chart.com, honest to goodness, it's cheaper than a cheap cup of coffee per day. And think of all the good advice and good learning you get from this chart analysis. So look, think about it. Visit SP500chart.com if you are not a member and check it out. Thanks for watching. Take care.